Jerome Powell is about to pull the trigger on an announcement. It is anticipated to come today that is so very important. He is going to pull the trigger and set in motion markets moving a specific direction, all at the same time as the DNC is wrapping up. A decision, a trigger pull that is going to allow the Democrats to praise the work of our current president and his past actions. A call that is going to cause stocks to rise. It's going to cause a lot of things to go up, but it is a bad decision, and it is going to send in the midterm our markets crashing. Why? Because inflation is going to take off like you wouldn't believe. That trigger pull is the decision to lower interest rates, and this is absolutely not a joke. Now, I've got a lot of stories here, and I want people to realize how serious this is, because in the short term, and we live in a day and age where people do not have a very long attention span. As a matter of fact, most people are just headline readers. They do not understand how economics work, and they are going to be very deceived, very fooled that the economy is rising. This is exactly what I've been warning this channel about and trying to warn the world about, that they're going to lower rates a little bit to deceive people, and then they're going to be caught in an inflationary trap like you would not believe. And it is our job, if we know this is happening, to take advantage of it. This first story is entitled "Global Stocks Hit All-Time High with Jackson Hole Expected to Pre-Announce Rate Cuts," because the Federal Reserve is meeting at Jackson Hole. Just over 2 weeks after the VIX almost touched 70. Remember, as the Japan carry trade, the yen carry trade was unwinding and imploding around the world. And I came out that day as global markets were melting down. I said, tomorrow everything's going to be fine. You're going to see a dead cat bounce. I took advantage of that day to buy up lots of assets cheap, and now are in the profit. But the next crash is coming. It says the market's freak out is now completely forgotten as futures continue rising, and the global gauge of stocks approached a record high as traders are now convinced the Fed will deliver on its first interest rate cuts in almost 4 years. Let me straighten this out a little bit for you. Only one can imagine what happens next. The MSCI's all-country world index ticked up 0.1%, trading near its all-time record close on July 16th. You know what else is very interesting is right now we are seeing gold at an all-time high. This is exciting because the reason why gold is at an all-time high, it's not for the same reason that you would think stocks are an all-time high. Stocks are an all-time high because people are racing for yield, trying to beat inflation. Gold is at an all-time high because traders are embracing, excited, and getting ready for a market crash. And just the thought of lowered rates actually brings gold higher. 95% of the time when rates fall and the Fed lowers rates, and they're only following the 2-year yield, it's because things are bad. 5% of the time, it's because they're trying to get you to vote a certain way. Now it says in pre-market trading, Charles Schwab shares fell 4.3%. After Toronto Dominion Bank has raised $2.5 billion in pricing of the sale of Schwab shares. Paramount Global shares rose 3.7%, and there's a slew of other stuff that's going on in the markets, but it says this is why. Expectations for U.S. rate cuts have completely erased the market slump at the start of August that was sparked by recession fears in the U.S. and a rapid unwind to the yen carry trade. Now investors are focused on Powell's speech at the Jackson Hole Economic Symposium on Friday for further evidence a September rate cut is coming. But even without it, about 100 basis points are easing are already priced in this year after the 818,000 payroll revisions reinforce the case for lower rates. Look, the government was caught lying. And I'm going to show you some other stories where the government and special associations are straight up 100% lying to the public right now. The only reason they came out with that revision of jobs where they said, oh yeah, there are way less jobs created. As a matter of fact, it's close to 1 million jobs. Just never existed. They weren't there. It's because they were caught with their hand in the cookie jar. And this pre-announcement today is happening today, I believe, a pre-announcement to September's rate cut, because they want the Democrats to be able to cheer what Joe Biden has done. This is very, very dangerous. It is going to lead to markets popping. Matter of fact, the crypto market might take off and jump ahead of the 200-day moving average, because people are going to all of a sudden feel like things are good, the economy's great, they're going to dive right back in. Now, before I go on, I'm going to start talking about real estate, because real estate is the greatest barometer of the health of the market. And what most people do not understand is the only reason you see the all-time high or the median price, the average price of real estate tick up, is because a very few pieces of property around the country are selling. We are in a worse condition right now than 2008. There are less homes selling right now than during the 2008 era. And so what you see is the only homes selling are the cheap homes. The expensive homes have all collapsed in prices. There's no buyers for those. The cheap homes, led by a handful of fools that are rushing in because they believe their real estate broker or their real estate agent that if they don't get in now, they're never going to, just like what happened in 2007. They are running the price up $500, $1,000 from the average price. That is a nothing burger. Prices are falling all over the country. Inventory is exploding. And I'm going to go ahead and say I've only offered this one time ever on the channel, the Real Estate Masterclass. We started with a very small group of people and beta tested it for 7 months. And now we're going to let another small group of people in. If you want, there's a link down below. It has all the courses I've ever made and on real estate, and all future courses included on real estate, and small group live coaching calls, all kinds of stuff. There will be no excuse for you not to crush it, even in this current market. And I've got videos coming out in the next few days of one of my students that just, if he closes on this current one, he's already negotiated $50,000 less on a new home, and the used homes are crashing so much. I can't wait to put those stories out. So this next story I want to talk about is the commercial mortgage-backed securities crisis, and it is massive. It makes the mortgage-backed security crisis of the 2008 era look like a joke. It says 1 million square foot office building in Center City, Philadelphia, appraised for 25% less than in 2021. It says the 1 million square foot office building just blocks away from City Hall in Philadelphia saw its appraisal value crushed 25% from $282 million in 2021 to $211 million this year, according to a new report from BizNow. Citing Morningstar, the report notes that Shorestein Properties office space is about 80% occupied, has been in special servicing for a year because they cannot make their payments. A payroll agency, bond agency report reveals the Philadelphia office market has had a 52% stress rate in Q1, the fourth highest in the nation. And this is just the beginning. It started with China and has now moved over here. It's getting worse and worse. Check this story out right here. This is out of CNBC. Now, this is 100% a lie and propaganda. And the sad thing is, most people aren't going to figure it out for quite some time. It says, this is the story, and I'm going to read it, and you're going to see all the lies, but the way that they word the title, it causes people to think that the market's doing well, the real estate market. And again, this is the greatest wealth effect in the nation. As more and more people turn on the news and they're seeing bad stories. Austin's collapsing. Phoenix is now crashing. San Francisco, big metro, they're crashing. And now you're going to start seeing small towns going down in price, inventory exploding. People will panic. They're going to sell their Airbnbs, their second homes. That's the first wave of the selling. It's already begun. And then you're going to see even greater opportunities because people are just going to straight up panic and go, I'm going to rent. Because as of right now, it is cheaper to rent than to buy. And you'll see a mass migration go from owners to renters. We saw the exact same thing between 2006 and 2008. And this is even before the foreclosure wave. This is the title, and this is what is, think about this. July home sales break a 4-month losing streak as supply rises nearly 20% over the year. Now, what would just that title, if you were just a headline reader, what would you think? Wait a minute, we just broke a losing streak. We're now winning, right? And they say that's even on top of the fact that inventory is rising, supply is rising. So not only is supply rising, price is rising. That's just what the headline reader thinks when they see this headline. Check this out. It says closed sales of previously owned homes rose 1.3% in July compared with June on a seasonally adjusted annual basis. Okay, well, just so you know, that's not a year-over-year number. So just because sales rose 1.3% in July compared to June, June's horrible numbers. So you're comparing all you got. This is what the National Association of Realtors has right now, because they are straight up lying to you. They just lost that massive lawsuit. They are in recovery mode. They're trying to fix things, and they're fixing it with straight up lies. They've got the chief liar, Lawrence Young, doing it for them. So they're sitting there going, all right, sales rose 1.3% based off the last crappy month. That means nothing. That means nothing. So let's go. It gets even better. It says this was compared with June on a seasonally adjusted basis of 3.95 million units. That was the first gain in 4 months. It says sales were 2.5% lower compared with the same time last year. So they tell you the truth in the next line. Yeah, it's up 1.3 based on the last month, but when you look at it on a year over year, apples versus apples, the exact same month last year, sales are down 2.5%. This is how they wordsmith. This is how they lie to you. And this is how you are going to save so much stinking money and be able to raise the bar financially for yourself and your family. If you care about that, type 1 down below. And it's important for you to say it out loud, because there are a lot of people that would like to be wealthy. They would like to be rich and have extra money and be able to go on vacations and be able to help people. And then there are people that are straight up committed to it. And I'm going to tell you what, there is a massive difference between those that think about, oh, I'd like to be rich, and those are committed to being rich. Totally different people, and you got to make a decision pretty quick, because this economy is coming down whether you like it or not. No lies from the government and no lies from the real estate associations are going to stop this train from running aground, or that's the wrong term, but you know what I mean. Now it says here, despite the modest gain, home sales are still sluggish. This is Lawrence Young, the chief liar economist at the NAR, in a release. He said, but consumers are definitely seeing more choices, and affordability is improving due to lower interest rates. So he just told you right there, the buyers are seeing more choices because inventory is exploding and affordability is improving. So that means prices are going down. But he says it in such a way, it's wordsmithed so well, that you're sitting there going, hey, you know, maybe this is a good time. Now it says these sales are based on contracts that were likely signed in May and June when mortgage rates were well over 7%. Rates now have begun dropping in July and are now hovering around 6.5%. All cash offers, he said, made up 27% of July sales, up from 26% the year before. The supply of homes for sale continued to move higher. Inventory is increasing. And then we got, and just so you know, these numbers where it says here inventory is increasing, 0.8% from June and 19.8% higher than in July of 2023, 19%. That is straight up, I don't care where you are. As a matter of fact, type the town or city that you are in that you are witnessing right now an explosion. Right now, the area I'm living in, we are seeing almost a doubling, 100% increase in units for sale than as opposed to last year. There's one town that I'm looking at specifically in Nevada that had an increase of almost 3.5 times more units for sale this time as opposed to last year. And what I saw the other day, and I know this is expensive real estate, not everyone can afford it, but I was looking at some properties. One was $1.2 million, and it had been on the market for 60 days, and they dropped it $200,000. 200 grand, that's like 18%. Because they need to sell it, and they need to sell it now. A lot of these people are sitting on massive amounts of, out of that 1.2 million, that person paid 350 grand for that property a long time ago. They've got a ton of money built into it that they could drop prices, and you're gonna see more and more aggressive pricing. I'm watching that property like a hawk because nobody's coming to buy it with a $200,000 low, and unless a crazy person walks in, I bet you that property is going to be $850,000 by January. And that kind of stuff gets me excited because I'm going to pick it up, I'm going to rent it, I'm going to make a lot of money from it, you know? And it's not because I'm taking advantage of people. I'm going to do the market rents. Here you go. And then when the person rents it and takes good care of it, I'm never going to raise their rent, because I don't care. Once it's working, I'm going to move on to the next rental and the next rental and the next rental. I don't like landlords that raise rents on current tenants. You should never do that. Why would you do that? If they're taking care of the property, you take care of the people, and then you become rich. Look, if you want to join the real estate masterclass over the next couple of days, we're going to be opening it up. I've only done this once. You'll click the link, you can see everything it includes. But I am watching incredible success stories already happening, because there are people that are buying right now and finding deals and negotiating $50,000, $100,000 off of properties because they know how to negotiate it right. And so it includes live coaching calls, all that jazz. Go check it out if you want. It's going to be open for like 3, maybe 4 days, and it's very limited. So we've been beta testing this with a group of people for 7 months now, and we've seen great results. So I'm really excited about it. Hope you guys have a great day. The Economic Ninja is out.